Good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, April 11th, 2022. The markets remain interesting in terms of coming to a conclusive decision as to direction and to what the actual wave count is. As those who have been following me for a little bit realize that I have been running two counts parallel with one another, waiting for the moment when one takes over and then shows us direction, or the other takes over, which will show us the same direction. Now, that all revolved around as to whether or not this intermediate wave 2 had completed wave A here at this level, and this would have been a B wave, and then still left a C wave up, or whether I was going to have to switch and put the intermediate wave 2 here as a completion point, and therefore we are in the beginning stages of a much larger intermediate degree third wave down. Now, today's action, as I left it last evening, was that the market was at a point that if it was going to go up, it needed to do it quickly, get itself back above 42, 14,003, 14,004, et cetera, and move itself above 14,640, and then upwards to get itself above 15,268, and then up to those higher levels that we have previously discussed. That did not happen. The market continued to decline, and then added to that decline today, and then broke down past 14,102, 105, which is where that support level was that I had been discussing, saying, if it breaks below that level, it's really going to lean the scale towards intermediate wave 2 being complete and intermediate wave 3 being underway. That occurred today. It broke 14,100, it broke 14,000. It has recovered it now, but it broke 14,100 and drifted into those high 13,980 to 990-ish numbers. Now, what does that conclude? Unfortunately, it forces me to leave open that potential that the market could turn and race up. Now, I actually am not anticipating that, and that's based on what I continue to see in the bond market, what I continue to see in terms of just the development of inflation numbers, what I see happening to within the individual stocks. So what I had anticipated that the market could come out of last Friday's expiration and a little bit on the long side, getting prepared for this launch higher. That obviously did not happen. And so what I'm looking at now is that I've moved the alternate view to the preferred view. And that is that the intermediate wave 2 completed here at 15,268. So we are in the beginning stages of intermediate wave 3, and that's a decline, and it's a large decline. Initially, as I had spoken previously, right off the bat, I'll go up to the daily so we don't have to scrunch that chart quite as hard. Wave 3, when compared, intermediate wave 3, when compared to intermediate wave 1, the relationship is all the way down here, 1.618. Minimum would be 100, which is 11,000. So this is where 3 would be equal in length to 1 at 11,438. Well, wave 3 in its entirety is going to be the longest and strongest wave out of this intermediate degree 5-wave decline. So that does tell me that it should not stop there. It's got to be coming longer than that first wave. And that puts us down into these levels. And the next major relationship comes in at 1.618. And that's at 9,070, 9,070. So we have a great deal to go, in my view, to come to the downside. And it's sneaking itself in slowly but surely as the market begins to realize what is going on. What is happening with interest rates? What did they try to tell us? That this was already baked into prices? Well, now we're beginning to understand that the Fed is so behind in what they're attempting to do to get a control on inflation that an inflation now has control of them. So if you look at it that a little bit different way, the bond market continues to tell us we're not even close, folks. We're not there yet, and we're still dropping. Look at the bond market. The 30-year bond was down, and the 30-year bond is down again as Globex begins. So while this might just be a little bit of a run up, just because people are going to make adjustments to positions, I just do not think it's going to last. I do not see us putting in a humongous rally from here. Stranger things have happened, I know, but let's take a look. If indeed we are now in this intermediate third wave, we've done minor, and it's going to consist of 5 waves of minor degree. At best, minor 1, minor 2, we're inside of minor wave 3 down. That's also going to consist of 5 waves of minute degree. Best, we have minute wave 1, minute wave 2. That suggests that we are now dropping in a minute third wave, which again, within this particular minute sequence of 5 waves down, which then builds on that minor third wave, the portion that we're in is the strongest and the longest portion of this internal division. It can divide again. And what I mean is if, oh, come on, why does it do that? This is what it does. Let's see if it, come on, Jesus, there you go. When we take a look at this, if we're looking like 1, 2, and then I go 1, 2, 3, 4, 1, 2, 3, 4, 5, I've got a 5 wave down to there. That's not all of wave 3, no way, no how. But it can be subminute wave 1, of minute wave 3, of minor wave 3, of intermediate wave 3. So building blocks, remember, Elliott wave is building blocks. Now I'm breaking it down to another level, another degree down, because I do anticipate, as I just pointed out, if I'm looking for this intermediate third wave to get us down to 9,070, we're sitting at 14,000. I'm 5,000 NASDAQ points away. You better pick up the pace. So don't get caught on counting too fast. You would be correct in counting 5, and they subdivide nicely, but don't count too fast. So that's what I'm going to showing you right now. At best, I have minute 1, minute 2, subminute 1. We might see a little bit more rally. If it breaks, that's the smallest wave 2 I've seen in a long time. So, but it could be enough. Could be enough, honestly. And then we would be in subminute wave 1, subminute wave 2, and we're dropping again in the third. So it would be a 3 of a 3 of a 3 of a 3. And so you don't get confused. Just think of the action. Count back up. So in other words, right now, 1 of 3, 2 of 3. And if this is 1 of 3 of 3 of 3, this would be 3, this portion would be 3 of 3 of 3. So if I'm kind of dropping at another level, that means I have 4 breaks. And that does begin to show us the intensity, the depth at which this could go, and what lies in front of us. So while I do think we're going to have rallies, obviously, there are going to be little bounces up and down, the trend is down. And I'm going to stick with that until we get to a point where I'm looking for a little bit larger of a pullback on the minute and subminute degrees. This pullback on a minute level was pretty good. It was 300 points. It was 300 NASDAQ points. That's a good run, and that's very tradable to the long side. We get down here in these smaller moves, like particularly this one, 33 up to, it was 100 points. Doesn't look like much on the 1 hour chart, but it was 100 points. So here we sit. As a day trader, those bounces are tradable. As a position trader, you sit them out. As a, as within an options position, that's just going to be a part of what happens. But for trading purposes, I believe we're going to start to go, and we've already now broken back below 14,000 again. And if it starts to pick up, this is where we're looking. Our next support on terms of this minute third is down here at 13,769, 67 or 770, right in that area. We have additional support, and but that's going to be at the 382 level for the larger intermediate degree. I wouldn't suspect that it's really going to have a huge effect on a sub-minute degree drop. So I'd be holding it to this other support level. And below that, we start to break. So it is possible that within the next day or so, we're going to be down here to the 1.618 for minute 3. And then we'll complete that. We'll get a nice bounce in a minute 4. We'll do another 5 down to complete the minor 3. And again, then we're really looking much lower, but I'll actually have to wait to put it in once I get some further down to get the adjustments in there. But I'd be, if we're getting down to here, down to 320, 330, or 230, excuse me, then, and we're doing a 4th wave bounce, and then we start to come back down. Well, we're starting to look dropping below 13,000. And then once we complete that minor 3, we have another minor 4 bounce, and then we've got that larger 5th wave in a minor level to complete the intermediate. So I would suspect that the minor 3 is going to start pulling us down into these areas so that when we get into that 5th wave, we don't have quite as much to drop. So you're going to see how this is all going to become possible, and it's really not as far away as you think. So for tomorrow, I'm going to continue to look for downside. I think that now we've got this going. I don't see why, unless something spectacular comes out, the best news you've ever heard in your life comes slipping out the door, and they have to buy. I don't see that right now. We got too much going on that remains unresolved, and I don't think it could be resolved overnight. But in any case, we are entering into earnings season. So we got to keep that in mind. First out of the gate are going to be the banks. And so they tried to hold those banks up pretty much all day. And they did not a bad job, but they kind of gave it up at the end of the day because the whole market gave it up at the end of the day. Keep an eye on the bonds. That's also going to be able to keep us going here. So anyway, I think that rallies notwithstanding, that the trend will remain down. So our larger slides are going to come to the downside. There's not need to, again, remember with the volatility increasing, the volatility and the speed for a bounce will also be bigger than you think. So while we might be thinking, well, I'm short, I'm just going to hold on to that short, and it bounces up 100 points, that's really going to affect your position if you're short a future. So bear in mind that that can happen if you're a day trader. And support levels coming off. We have 13,956. Then it kind of gets opened up here. We don't really have anything until, I mean, yes, we have 13,900, 13,850, et cetera, et cetera. Just because of the round numbers, they should provide some support. But the next Elliott or Fibonacci support comes in at the 100% level, and that's down at 13,770. And then from there, we might get a decent bounce, and then we're going to drop again until this is all complete. Continue to trade the moving averages, by the way. See how they've straightened themselves out? 200, 50, 20, 8, 4. In alignment on the hourly. Let's take a look at the daily. Let's see what they're looking like there. Look how quickly they've dropped. The 20 is below the 50, the 4 and the 8 are below the 50. Now it's just beginning to get in alignment, but it is in alignment. There's the 200, there's the 50, there's the 20, the 8 is just below it, and there's the 4. Negative, negative, negative bar today. It's kind of turning into a negative bar to start our next session, but the daily continues to point lower. This 200 remains flat, so that's a pretty consistent resistance level right now. But if this starts to turn, these are going to be much sharper. You can see what today's trade really put a sharper angle on the 8 and the 4 and the 20. And the 50 is going to catch up, and the 200 is going to catch up. And then it's not going to be looks good. One last that I'll check is that the weekly, the 200 is still pretty far along, but I think it comes into play eventually with all of this. So we're not quite there. The 20 is still up. The 50 is, it's still lined up more for upside than it is for downside, but weekly, it's a bigger bust and it takes a lot longer to turn it around. So that's our picture for tomorrow and a little bit longer. So trade smart, trade using the moving averages, using the Elliott wave, using the Fibonacci, and have a great trading day. Follow the price action. Do not try to fight the market on this one. Have a good trading day. Next update will be on Tuesday, April the 12th.